Let's get some analysis on this. Taha Arvas is an adjunct professor of finance at Boğaziçi University and joins me here in the studio. We also have Jeffrey Tucker, president of Brownstone Institute, dedicated to social and economic research. He joins me now from New York. Jeffrey, I want to start with you. Janet Yellen's remarks this week have really scared investors away, as she said there was no blanket guarantee, meaning any move to broaden deposit insurance, essentially. Has the dust settled yet on this sector, or will we see more turmoil in the coming days?
There's more dust and dirt than ever. She the other day promised universal bailouts and then is trying to dial that back because that directly contradicts Federal Reserve policy. So we have really two monetary policies running at the same time, one hawkish and one dovish. So you've got Powell out there raising rates under the belief that there is a terminal rate that he's going to raise short-term rates ahead of existing inflation rates, and that's somehow magically going to kill inflation, and that is his central concern. That's really all he cares about, because he wants to be the new Volcker. So and reverse Bernanke's policies that began in 2008. So that's the goal, which means more and more and more increases, because we're nowhere near that point. We're still in negative territory. You know, we have to remember the federal funds rates are still negative by about 2%. So he's got a long way to go, even to get positive rates in the short term. Meanwhile, Janet Yellen, yammering around, goes on about how we no longer have limits on deposit insurance in this country. And then in her testimony this week, she testified before the Senate on March 22nd and said the banking system is sound, and then otherwise went on with her testimony. The very next day, she reprinted the exact same testimony while leaving out that sentence.
Absolutely.
So that doesn't calm markets down. When you take out a sentence that says the banking system is sound, you take it out of your testimony the next day. That's pretty worrying.
Right.
So yeah, nobody knows what the policies are right now, and in terms of the moral hazard she's unleashed, it's really unspeakable. I really do think this week needs to go down in the history of monetary economics as really one of the great calamities. It's a potential disaster.
Absolutely, possibly not a great way to settle that dust, right, Taha? And I do want to, across the pond, I do want to ask you a question on Credit Suisse as well, because certainly the dust hasn't settled yet on that front. I mean, we know that bondholders in Credit Suisse, they now are suing the Swiss government over its decision to write down completely the value of at least those 81 bonds, right? What's happening there? What are the consequences of that?
Well, I think the Swiss government, rightfully so, in concert with, we heard Jay Powell talk about it during his testimony, is trying to do whatever they can to calm nerves, right? We're here. What's interesting is Switzerland is one of the, probably the only example of an economy where the central bank is so strong that Switzerland really doesn't have a problem. It could very easily have saved, and it did de facto save Credit Suisse. It could have acted faster. What we're seeing on the European side is, unfortunately, this very relatively much less proactive actions. They're much slower. The weekends are much more important, apparently, to European government officials. But we saw today with Deutsche Bank something similar. So we're seeing a series of unforced errors, right? Yes, it's a calamity, but all of these things could have been avoided. We just talked about Janet Yellen and how she made that a huge fumble, and today with Deutsche Bank. So what they're trying to say in general is the banking sector is strong, but they're saying it slowly. They're making mistakes when they're saying it. The PR game is completely off. And right now, sentiment is what's important. And that's what markets are looking for.
Interesting. And do stay with me, because as customers pull their money from banks, they're looking for more profitable investment options. One of them is cryptocurrencies. They have steadily regained value as demand grows, with the price of Bitcoin hitting $28,000 for the first time in 9 months. Imre Boz reports. Let's get your thoughts on this now, Taha, as well. I mean, first of all, a flight to safe havens. I mean, how risky is it? And at the same time, we know that Switzerland is going from 2 universal banks to just 1. Do you think that's also a trend that we might see elsewhere, not just in Switzerland?
I think we're definitely going to see consolidation. We're already seeing that in regional banks in the United States. I think the major important point here is the Federal Reserve is saying that we're going to continue increasing interest rates, or we're going to stay them here until the rest of the year, no cuts. But the market is pricing in multiple cuts in June, July, and for the rest of the year. So this divergence has led investors it spooked investors. So that's why you're seeing this jump up in crypto. That's why you're seeing price increases in gold and other commodities. It's this uncertainty that needs to be settled as soon as possible, lest we have a major financial crisis.
Right, so Jeffrey, do you agree? I mean, can Bitcoin and all the other digital currency really represent safe haven and have store of value functions as well at this point?
When crypto came along after the 2008 financial crisis, a lot of people thought it was going to be functioning as a hand-to-hand currency. That hasn't really panned out well at all. But on the other hand, it has become a bit of a safe haven. I think it's fair to say that the crypto winter is basically over at this point, which is a remarkable thing. I mean, you have to look at the last 3 months to see that we've seen 70% gains in Bitcoin alone. And crucially, it's all these decentralized currencies that are performing very well, even while the proprietary tokens have, many of them have died. And also, some of the off ramps and on ramps have been closed in the US. So you would think that during these times, Bitcoin would be hit, but the opposite is true. It's starting to behave like a real safe haven, like gold used to be. And gold, too, is performing actually very well. But Bitcoin is absorbing a lot of this look for a safe haven. That's what it was invented for in 2008, and it seems to be performing exactly that way right now. It's been a remarkable thing to see, actually.
Jeffrey Tucker, Taha Arvas, thank you very much for being with us today.
Pleasure.